So let's talk about yields, which rose at the Nigeria Treasury bills auction on Wednesday as the stock market took a 1.6% beating, the first of such big one-day declines since February started. The Naira, however, rallied some gains. Today, the market seemed to have realigned a bit, with equities clawing back 0.17%. So let's talk to Wale Olusi, who is the head of research at United Capital PLC. And he joins me now in the hunt for yields on Broad Street. Good to see you, Wale. Good evening.
Good evening, boss. It's a pleasure to be here. Good to see you.
Thank you so much for making the time. What's going on with this market interplay?
Well, I mean, there's a lot happening in the market at the moment. I think the man, conducting, the orchestra remained the, central bank. What we saw last year was a situation where a record low yield environment resulted in huge demand, not only for equities, but for bonds. But, what we've seen in the last 1 week and half, so far in February, is a situation where the indication that the yield environment that has gotten to record low levels as of last December, is clearly, turning, is taking a U-turn. I think that reality, has not only spooked the bond market, the equities market is also, taking a cue from that. So what we've seen so far in the month of February is a situation where, investors continue to exit the market. But following the, OMO auction that the central bank sold last week, where we saw a spike in stop rates, about 100% spike across the three maturities, especially the 1 year bill that went to 10%, the first time in a long time, maybe about 12 months, that we will be seeing a double-digit yield stop rate. So realizing that the market sold off on Thursday and Friday last week, and then there was an NTB auction, that's Treasury bills auction, scheduled for this week as of yesterday. The result of that also show another 100% increase in stop rate. There was a spike to 4% in the 1 year bill. And in anticipation of that yesterday, the equities markets saw a huge sell-off. Today, we saw something similar. In the bond market, what we've seen so far since December is a situation where there's a steepening. We call it bearish steepening. That is, the yield at the longer end of the curve is increasing at a faster rate compared to the lower end of the curve, because it looks like dealers and investors are exiting their long positions, which are largely in premium or in profit positions. They are taking their profit and they are coming to the lower end of the curve to stay in cash, so that when the dust settles, they will start taking advantage of the changing dynamics in the market again, largely because everybody is expecting that interest rates will increase, whether the MPC is staying it or not.
And that's the point. So where are yields? Where are yields heading for Nigeria's debt papers? Wale, that's my point here. Do you have any idea where the new direction is?
I tell you, that's $1 million question at the beginning of this year. But now, I think the direction is clear. Yields are heading northwards. So far this year, bond yield has increased from mid-single digits, about 5 to 6, 7%. At the moment, average yield in the bond market is nearing 10%. For the Treasury bills yield, because everybody is moving towards Treasury bills, it is still relatively low, but the only way is up. I don't think we are going to be seeing the record low levels that we saw last year. And not only investors, but even issuers, debt issuers, are also worried about this, because last year, a lot of issuers, including ourselves at United Capital, we came out to raise capital at record levels. We raised a particular commercial paper at about 1.26%. I mean, for a corporate, that's extremely cheap.
You guys, you asked in the money.
Exactly. I mean, with stop rate for 1 year bill at about 4% as of yesterday, I can assure you that if you want to issue any commercial paper going forward, the market is going to be asking for a significant premium on what you have now because the direction is changing. So I think the direction of yield is clearly upward. So if you're a low risk investor, I think you're back in business.
Is this the end of the stock market rally, Wale?
Well, I mean, it's tricky to say because there's still money on the table. I mean, corporate earnings are coming. Second, the NSC has given everybody a deadline to publish your audited result by the end of February. And if you look at the disclosure table of the NSC, there's a long list of companies saying our board meeting is currently being scheduled for this date or that day, meaning that by the last week of this month, you have a flurry of earnings and dividend announcements every here and there, meaning that at current price, based on the last few days of trade, dividend yields are going to be extremely more attractive again. So I think some investors will come back to the market to come and pick, those stocks of, I mean, at current level, a Danksem or a Zenith or a UBA or even a United Capital. They are all doing dividend yield of close to 10% or more. So I mean, that's still a lot of money to be made. So even though sentiment may be waning for stocks, people will still, new entrants will still come and pick up those stocks for dividend sake. So I think the market is approaching a lull. I mean, it's kind of the very sentiment may be offset or tempered by demand for dividend stocks, at least for now, until there will be no announcement for dividend again. And then perhaps we'll enter into a short bearish market before you start seeing interims again.
So in this entire conversation, Wale, what is the playbook for exchange rates of foreign investors bringing in inflows into this?
Well, I mean, I think the only thing we can rely on for exchange rate and, the dynamics in that space is, the actions that we've seen from the CBN and the inferences we can make, from that. And of course, don't forget oil prices as well, which has been rallying for a while now.
Yes.
So I think CBN sold another OMO today. Last week, they sold OMO, and both of them, 1 year bill went for as high as 10%. The only interpretation we are giving to that is there's a possibility that, the central bank is trying to woo foreign portfolio investors again. If you are doing that, what you are trying to do is to show off your external reserve. If you are able to do that, the CBN may just be able to push up the external reserve to around $40 billion. Once Governor Emefiele has $40 billion in his arsenal, I think he will start supplying enough, to the I&E window as well as BDCs. Again, if that is achieved, I think, he may just be able to crash the parallel market rate towards the official market rate, and then we can get stability. So I think the playbook for currency now, I wouldn't speculate in the parallel market that the Naira will crash. Oil prices are improving. OMO rates are going up. It looks like dollar inflows may be coming in at a faster rate going forward, and the governor may just be able to stabilize the market. So you make the probability that you will have a convergence again, like we have before this pandemic.
Very smart move. Very smart move. Looking at oil at 60 and decided to just start moving yield. If the money is out there, why not provide the bucket here and you just get the money? So from your point as an analyst,
there's a lot of money right now because of the global monetary policy easing. Yes.
Yes, and the U.S. is putting another almost $2 trillion on the table. So there's a whole lot of money. So for you, is the current oil price rally positive for the local markets and local investors?
I mean, it's funny. I mean, what is positive or negative is difficult to say now because the previous episode of increase in oil price have been known to be consistent with stock market rally in Nigeria. But that's because you have a lot of foreign portfolio investors, looking at Nigeria. But as of last year, a report from NSC is suggesting that in the last 10 years, foreign portfolio investment in Nigeria to stocks, hits the lowest level in 10 years. So the stock market rally we saw last year is broadly driven by domestic investors like, yourself and myself, Bosin. So if most of us are going to be exiting the stock market to move into safer investments such as money market fund and bonds, it may not be so positive For Nigeria, I think I will be more worried because now that the government have pegged, oil prices, fuel and petrol prices is being deregulated. It may be worrisome because now petrol may just go from 159 or 163 to something higher, just like we've seen in recent time. So, positive, negative, it depends on where you look. It's positive for government coffers. Budget is benchmarked at around $40. You can get more to excess crude account at 60. But now inflation may just be increasing because fuel prices will be adjusted, electricity tariff are likely to be adjusted, and so on.
I understand. The kitchen is not as cool as you expect for Godwin Emefiele and the rest of his team, including the debt management office. I'm sure you, analysts, will be digesting the latest debt management strategy papers of the DMO. Let's get together sometime next week and talk about that. Thank you so much. Many thanks for your time. Wale Olusi, Head of Research at United Capital, the hunt for yield on Nigeria's market street.